Good morning to everyone, and it's really honor and pleasure to be at this economic conference in Ljubljana. Usually I am at most of our events which we are preparing in the Energy Community Secretariat. So when I started to prepare actually the presentation for this event, first what crossed to my mind is actually that title is actually market and infrastructure, but the crucial question for me, and it comes in many discussions as well, it's always what comes first, market or infrastructure? So do we need to have enough infrastructure and capacity and everything in place and then market can develop? Or it should be developed market able to attract somehow new suppliers and new infrastructure. So let me present you some findings and some of my thoughts on that. When you look at the infrastructure, this is from ENTSOG, European Organization for TSOs. It seems that there is quite a lot infrastructure in place. So what you see in this picture actually is enough to go 11 times around the globe, so 11 times around the equator, and this is what we have at that picture. It's not only European Union. You see it's more than half it's in European Union, but Russia, of course, plays a big role in this infrastructure amount, and contracting parties of the energy community, which means countries which are not in EU, but they are here in Europe or close to Europe, they count for 10% of this infrastructure, and this is just enough to go once around the equator. And Ukraine is, of course, the main contributor in this amount. So it seems there is enough infrastructure to have developed market. When we come to rules, so it's also a long period, 20 years of developing common rules for internal European market. Everything started in '98 with first energy package or first gas directives, and developing through years in more detailed and more strict, let's say, requirements. Then, of course, we have a bunch of rules. Maybe you see slides from Mr. Potočnik, how much actually secondary legislation goes together with main laws. So we have network codes and other regulation. And also with that development of actually real gas trade started in Europe, and 10 years more or less was enough to develop from bilateral trading to hubs and to real developed gas exchange. So far, it seems all fine. So infrastructure is in good shape, market rules are in good shape, and here is what I take from recent Acer report, because to me it looked like perfect illustration how actually markets and infrastructure should go together and be interactive. On this diagram below, you have, let's say, total daily capacity available, and then you have what is actually booked through the platform. So this is all colorful, and this big blue area is actually what is still under the long-term contract, short-term contract, bilateral contract. So not that it goes so quickly and so fast, but things are moving. And this is actually illustrated with this convergence of prices across the Europe, and more countries coming yellow, let's say. So having less and less influence of long-term contract, and then more influence of actually what is going around in neighborhood and at markets. important is, especially for me, is important to say, because I am dealing with those countries in Southeast Europe, that not the developments are equal across entire Europe. So you have Western Europe with more developed gas market, with lot of infrastructure, capacity available, and then you have Southeast Europe where things are not so clear and not so developed. So here actually in the essence is actually what comes first, markets or infrastructure. You have situation like countries, Serbia, Macedonia or Bosnia and Herzegovina having really one interconnector, and this is actually 100 or 200 kilometers called network, but actually is one pipe, and this is all supply which is brought to the country. So there is actually not enough commodity to start to speak about the market. From other side, there is Trans-Balkan route with huge capacity, but this capacity is not given always all according to European rules. So enough capacity, enough infrastructure, but market is still not developed. So still interconnectivity in that part of Europe should be increased. Still European rules to be implemented, and network developed as well. There is worth to mention CISEC initiative, which is really focused from European Union side or from European Commission side on this part of European market. And this is mix of infrastructure which has to be built and actually rules which have to be implemented, being in capacity booking and capacity allocation, or being in tariffs which have to be settled in a way to allow the trade and flow across the border. So for Southeast Europe is visible that new infrastructure is needed, but it seems that new infrastructure is needed across entire European Union. At this slide there is diagram from the latest 10-year network development plan done on European level, and you can see that majority of project is still linked to pipelines, smaller part to LNG terminals, and then few of them to storage infrastructure. And then you also can see here on this diagram that, let's say, maybe 1/3 or 1/4 of them is actually in advanced investment phase, or financial decisions are taken, and then you have more and more which are not so advanced. And this is actually reflected here, because from year to year or from plan to plan, you have part of projects which are actually just cancelled or, let's say, red-ticked. Few smaller part, 10%, 15%, which is completed, and then it goes on in cycles. And this is normal cycles for any planning, let's say, but that also related to infrastructure. Why is that? Sometimes I'm surprised to see so many projects still announced and still planned to be done. When you see gas demand in European Union and how it's forecasted for the next decades, it's not so much of surprise, because as you can see, demand will stay actually for the next decades how it is now, and domestic production will go lower and lower, and this is kind of tremendously even. So whatever capacity will be needed, either existing and not used, or new capacities to bring new supply to European Union. And then actually this part will go tremendously lower, so this is domestic production. This part will also go lower, this is Norway, because Norway needs to have huge investment to bring new fields into the production. So main battlefield will be here, between Russian gas and LNG, filling this gap, in European Union, and some new pipes, let's say, coming from Eastern Mediterranean or Cyprus. So this is the picture for the next decade. It seems not so bad forecast for the natural gas. Same picture you will see on the world level as well. Actually, natural gas is the only fossil fuel which will still grow in next decades, not so rapidly like it was before, but still slight grow, and then until 2035, and then some plateau, but not rapid decrease as well. Even according to some reports and forecasts, natural gas will bypass coal by 2040 as in share in total primary energy. We heard a lot about different scenarios, but here is actually from EU energy strategy for 2030 and beyond. And also doesn't look bad for natural gas. Natural gas will keep its share on 25% in primary energy, and even drop only for 1% until 2050. The same picture is also on the world level, and this is around 22%, let's say, in natural gas as a primary energy. But maybe we are in time when things are changing much faster than we think. And even this year, last few years, you heard a lot about decarbonization and how actually emissions should be brought on which level. This is 40 or 60 or 95% decrease of 2010 or 1999. And then actually this bright future for natural gas maybe means bright future for gases as such. Maybe not so much for biomethane, but biomethane also can play a significant role. But at the end, biomethane, although being renewable, at the end has this C component, which when it's burned will come to CO2. But this is maybe more bright future for hydrogen and methane and hydrogen together. With all these talks and possibilities to store electricity in storages, and with all those talks to go into the transport sector and other sectors as well. So, as a conclusion, gas market, natural gas market and natural gas infrastructure, yes, they are well developed in European Union with parts which are trying to keep the track and go to the same level, and it seems fine for the next 1-2 decades. But to be ready to future which might come faster, and to be ready for future after 2040, 2050, some things has to be done now, and we are already in discussion and settling all this, because there are many different issues for gas markets and for infrastructure to change, to think about, and to be ready and fit for the future. We have different gases and access to the network, which is not arranged like for renewable electricity. Renewable electricity has priority access and even feed-in tariff and feed-in premium. This is not the case for renewable or any other gases to natural gas network. Then from other side, actually there are appliances, and what will happen if 10%, 50% hydrogen come to your appliances at home? So this is the question for standards, for producers, to all sectors from both sides to be involved. So this cooperation and integration and coupling of the sectors, it's really baseline, I would say. So not only in operation of the systems, but even in planning and in brighter picture. Then you have issues which also mentioned by Mr. Potočnik this morning. So actually electricity storage is gas production. And who can do this? Because according to regulatory framework in place now, TSOs, being electricity or being gas, are not supposed and are not allowed to deal with gas production. So this is one regulatory issue which will have to be solved. Then how we will deal with all this actually verification and proof that something is renewable and CO2 neutral. Because system should be in place before we start to producing and entering and running, and then to discover actually, this is just calculation, this is fraud, this is not as we meant to be. So with all these new business models should come and will come, and they're already coming. And the crucial word for me is flexibility, and this is flexibility of systems and flexibility of switching the systems. But the more important actually would be flexibility in thinking and rethinking of our strategies. So that was from my side. Thank you very much.
Are key, but in many cases we see that where the infrastructure is lacking, we don't really have a market, which is a very important issue. Southeast Europe is Central and Southeast Europe is one of the examples. Maybe we have one or two questions from the audience now, since we do have first a presentation by Carolina before we move on to the next presentation. If you have any questions to maybe perhaps now for Carolina. Same goes to the partner. I have one, just before we move on to Lucio. You did mention hydrogen and gas solutions, so there is a target also from the EU at some point to have 10% of the gas being biogas in the system, in the European system. At the same time, we have seen this lack of infrastructure and the lack of penetration of gas in many other places. And not every country is like Germany, for example, or the advanced markets like Italy or Austria. How do you see this working? Because, when a private investment is to be made, you need to see that you can recuperate it, can make back your investment at some point. Is this something that you believe that will be there for the future, for the decades to come? Something that we should be all looking at, or renewables will, an electrification of the system will come in and effectively replace this kind of strategy or technology?
I think that we should be open, or actually policymakers should be open and flexible for all. I don't think that sorry. So I don't think that there is one silver bullet point which will solve everything, and then we say, yes, let's go for electrification, and then we will solve all problems. I think that all policy makers actually should consider first potential which they have, system which they have, and what they would like to achieve. Mm-hmm. So if there is a country with a lot of solar energy, like is Macedonia, North Macedonia, which even have sun in the flag, mm-hmm. It's obvious that they can go more for this kind of renewable energy. I don't think that there will be huge plants producing biogas and then biomethane, because then you have difficulties in transport of all these materials which you have for production. That can go more local. In Austria there are plenty of nice examples. Village actually using own waste, using crops, and then having energy for the village, and then just extra is given to the network. So politicians, and especially politicians in Southeast Europe and in countries where I actually monitor and work, they're always eager to be involved in such a big projects like Turkish Stream, South Stream, let's go for I don't know how many gigawatts, but actually some things can be really solved locally and with small pieces and then to reach bigger goal.
More decentralized, small
Yes.
scale and decentralized. Yeah. Okay. That was a very good point. So now we will move on to Lucy's presentation.
Thank you. Oh, I'm happy that I was in time. I'm happy that I was in time.
Good morning or good afternoon. Hope you can hear me because I don't have a strong voice. Plus, with my French accent, if you don't hear me, then it's a disaster. Can you hear me? Yes. Thank you. So I'm going to present something about LNG and about the market, which is complementary, I think, of Carolina's presentation. I'll leave apart geopolitics because Tatiana will present that brilliantly later. What I'm going to present today is about the role of Europe in the LNG, the global LNG area. I'm going to talk about the shift, what we've seen since last winter, and then the consequences of this shift, and then the future. It's not, I forgot to say, I work at Platts, which is a price reporting agency. So I focus on the market. It's not Platt view, it's my view. Okay, so thank you. Is this one? First of all, a map, because we love maps. It looks a bit complicated, but what I wanted to emphasize on is that there has been a shift since last winter. Usually you have a demand pull from Asia, and then you have a supply push to Europe. Basically what happened since last winter is that we had a weak Asian demand of LNG, and we had an increase of supply overall in the world. So what happened is all this LNG, which usually goes to Asia, which is reloaded in Europe and goes to Asia, it just stood in Europe. So you had a lot of LNG coming into Europe. The implication of prices, because this is my expertise. So if you imagine you're a European trader or a trading company in Europe and you want to make profits. What you do is you look at prices, and since last winter, traders make more money by just selling the gas into the European hubs, which here it's represented by the TTF, the Dutch TTF gas hub, which is in blue. And if you look the red line, it's the profit you make if you reload to Asia from Europe. And you can see that since last winter.
What are reloads?
Sorry?
You say reload.
Reload, yeah.
What is it?
So reload is when you bring the LNG into Europe, and instead of sending out to the gas hubs, you send it to Asia without transforming the LNG into gas. You just take the tanks and just send them to Asia, because Asian prices are much higher usually.
You mean redirected? Yes.
Yeah, you call it reload, but it's redirected. It's the same thing. Yes.
Thank you.
You're welcome. This chart shows that, which is still in line with what I was saying. Not only you have a weaker demand in Asia, but you have a much more supply overall in the world of LNG, especially from Russia and the US. And it's going to continue because we have more US LNG coming online and more Russian LNG coming online. And in fact, this is just a chart showing that Russia, which was below Nigeria before, has now is second in the rank of LNG import into Europe now. US LNG is growing as well. And it's a trend which is going to continue, as I said. Now, I just talked about what happened since last winter. This is still what happens, but this is about the consequences. The gray area is the average of send out. Send out is transformation of the LNG into gas into the hubs. So the gray area is the average of the 5 years between 2014 to 2017, And the blue line and the red line are 2018 and 2019. So what we've seen is with all this LNG coming into Europe, we have much more send out to European gas hubs, right? And so what does it mean for the operator of the LNG terminals? It means that you see your terminal way more utilized. Before like in 2018, the beginning of 2018, the terminal were used at about 20-30% of the capacity. Now you have some LNG terminals, such as the Gate or Drain, they are used at 70%. So this is good news for the operator. Finally, the terminals become useful. No, send out is to transform the LNG into gas and send it to the gas grid in Europe. You transform the LNG into gas, regasification. It's the same, it's a synonym. So I just want to kind of emphasize on why Europe is able to absorb all this LNG. It's because Europe has a huge capacity of storage, 100 BCM per year. So it's also a huge capacity of regasification or send out, 220 BCM per year. It has more than 20 LNG terminals. And also, market-wise, it's very liquid and it's very transparent. So if you're a trader, you're happy to trade on these hubs because you know where your gas is going, what you can do, the transport costs, and so on. So the liquidity, because of all this LNG coming into Europe, the liquidity has surged, and especially the Dutch TTF, right? So this chart shows that. If you look at the end, at the end of the chart, you see that the liquidity has really increased in 2019, and especially the TTF, the Dutch gas TTF hub has increased more in terms of liquidity, has increased more than the NBP, partly because of Brexit, because people prefer to trade on euro, but also because the TTF has attracted attention for contracting long-term contract LNG. For instance, you have Cheniere or even Novatek. We know that they have long-term contract linked to TTF now, right? So a lot of focus on TTF, generated by liquidity, which generate attention. This is a cycle. This influence can be seen on the price anchor. You see that before the JKM, which is the Platts reference for the Asian LNG prices, JKM before was following more the long-term contracts which are linked to oil. And since last winter, you can see that it has fallen much closer to TTF. So now you're going to tell me, okay, thank you very much. This is interesting, but it's short-term view. It might, you know, what if the Asian price go up again and then we reload or resend or redirect to Asia? This is true. If we look at our prices, like future prices on the curve, you can see that the Asian price are expected to go up again, especially in Q1 2020. You see that it's more profitable. It's going to be profitable again. It's going to be in the money to resend to Asia. But this is also a short term because, yes?
Can you go back to the previous slide?
Yeah.
So those...
These are the netbacks.
Sorry?
These are the netbacks. So it's the netback, so it's the money you can make by sending the LNG somewhere. If you do the difference, like you take your final price, for instance, the JKM, and you cut all the costs, and then you can see if you're profitable or not to send the LNG the destination you want.
So for example, for Qatar, so what does that mean?
For Qatar, it means that that it's more in the money to send to Japan and Korea.
So Japan is kind of the reference here, yeah?
Yeah, because usually you send to Asia. Like traditionally, Asian prices are the highest price, and they are so high that even with the shipping cost, even with the feed gas and so on, you earn more money, you make more profit by sending to Asia. And last winter, it hasn't been the case anymore because Asian prices were much lower, but it's going to go up again according to the current price for the future.
Is your net back mark to market?
Yes. Yeah, it's spot price, yes, mark to market.
Okay, so mark,
But those
energy
trade expected.
content of oil, energy content of oil, or to the sort of international LNG price?
Can you say it again?
Is it mark to market energy content or based upon a spot price for LNG?
Spot price for LNG,
Thank you.
which are more and more important, by the way. It's like,
So can you please elaborate more and we kind of break down about this market price rather than long-term contracts?
sure. I mean, it's not something that is really transparent, but what I can say is that about 30% now is spot price overall globally.
Yeah, so those kind of might represent very small kind of share of kind of the great
Yeah,
market.
so it's about 30%. So yes, the Asian prices are going to go up again, so we might see the same trend as before where finally the LNG goes to Asia. However, we expect more demand for LNG in Europe. Why? It's because we have this declining production of domestic gas, right? And this is just a chart, just the Groningen, about the earthquake issues and so on. So we are going to have less and less production in Europe of gas. So a part of it will have to be replaced by LNG. And this is the forecast from our analysts. It's not going to be tomorrow, but from 2024, you will see an increase of LNG imports into Europe in the energy mix. Now this chart actually goes along with the send out regasification slide I showed before. The LNG terminal in Europe regained momentum because they are more utilized than before, because of this new trend where you have more LNG coming into Europe. You have some support from the European Commission in some projects that are some of them are listed here. The German case is an interesting one. I remember until last year, I could hear from the participants that it's only politics. Nobody needs a German LNG terminal. It doesn't make sense in the market because we have enough terminal. They are underutilized, so it's just going to be a cost for us. We don't need it. And these projects are on since the 70s, so it's a long project. However, since we've seen this shift with all the LNG coming into Europe, people have changed their minds, generally speaking. They see actually an interest of having German LNG terminals because it avoids gluts. It's an option that actually is needed now. I don't know if you're aware, but at the moment there is so much supply of LNG compared to low demand that there are a lot of tanks, LNG tanks going around all over the world and not finding available slots in terminals. And this case can be repeated and it can continue. So basically people are storing LNG on tanks right now. So yes, I found LNG terminal a kind of interesting case where it was just politics now and it become economics. By the way, there are a lot of operators, some operators already increasing even their capacity at the LNG terminals. You have Grain, you have Foss, and long term. So it shows a vision of, yes, we'll need more LNG in the future in Europe. Now, I'm just going to touch on the small scales, medium scales. It's not my area of expertise yet, but I've been asked to look at that more and more because it's developing. It doesn't represent a big part of the market demand. It's about 1 or 2% at the moment, but as I said, it's growing because of the so-called IMO 2020. I'm sure you've heard about that, the emission of sulfur, the regulation on marine. At the moment, we don't have an equivalent of LNG to replace fuel oil. So LNG is the best alternative in terms of cost and in terms of feasibility. So that goes into the same line as, you know, LNG will be needed in Europe. And also it allows to kind of diversify your incomes, and you have a lot of LNG terminals in Europe already who use small scale just to diversify their activities, trucked, but also marine fuel. And this is to finish, it's just a few numbers to show the developments of small scales. Now the small scale represent about 2,000 million euro, and it's expected to grow to about 6,000 million euro in 2030. The road transport, like trucks, will be is likely to be the biggest segment, while the marine is going to grow exponentially. And I put some example of companies already involved in small scales, but there are many more. Thank you very much.
New developments that we have in terms of higher demand of LNG in Europe were all linked to the prices that we have seen in the past few months. But they might be even more competitive than Russian gas in some cases, depending on the market that we are looking at. So this price differential, of course, explains a lot about that. And a small clarification about the question that we received earlier. I mean, reloading and redirecting is not exactly the same. Reloading, of course, you have to reload again, which means that you have unloaded the cargo. This has to do with the contractual obligations that we have. So different contracts, different obligations. And this is a very recent issue because we have seen that only with the US LNG contracts allowing you to redirect the cargo before you have to unload the cargo. If you have a contractual obligation with a traditional supplier, like Qatar, for example, you have to unload the cargo, and that's why the reloads in Europe are very common. Okay, so we do reloading in Europe because there is an arbitrage opportunity to make some money if you send it back to Israel. Okay?
The cost implication for reloading also is very big.
I hear you.
Yeah, there is a cost implication for the reloading also, because you have to reload, which means you have to book the storage capacity, you have to book the pumping capacity back into the new terminal, and therefore that kind of leads into
The chance of European TSOs will give you guys a little bit more facilities and make some additional Europe.
Just a clarification, as like there is US LNG, but you have also Russian, you said Russian gas, but there's Russian LNG as well.
Yes, that's right. I'm sure we'll be hearing from Tatiana about that in her presentation. We have a question here.
Yeah, Hermann from Berlin. I have two questions to this wonderful presentation. One is, don't you think that this LNG terminal discussion in Germany is a bargaining chip for Nord Stream? Because the idea is the US will accept the project of Nord Stream against Germany. The second question is the discussion of 100% electricity. Of course, this is a challenge for gas. And another option why to build a LNG terminal is, of course, if you have the infrastructure, then if the government approves this infrastructure, then of course the government should also approve to use the gas in the future. So this is another option, a bargaining chip in a political debate. That is my reason why there is so much interest now in LNG. But maybe I want to hear you comment on that.
So, thank you very much. So, yes, there is a lot of politics still in the German LNG. We know that behind that there is also maybe a business on the cars between the US. You know, there's a lot of things which are kind of said about that. But there's not only the US sending LNG to Europe, there is also Russia sending, or other Qatar is very much involved in these terminals. So it's not only US in this case. Second question, I'm not sure about your point. See if you can just repeat.
So the last government, which is now out of office since 3 years, they had proposed that we want to have 100% electricity. So this means no room for gas.
Yeah.
But if you invest in the gas infrastructure, then you must also organize room for gas in the future energy system. Whatever this gas may be, may come from, etc. So, and if I would be in the gas industry, I would do something in this, in particular the government sponsor these investments in order to keep in this.
Yeah, and also they are trying to develop a lot of small scales in Germany as well. So it's also an opportunity to, to do something about the environment, because apparently LNG is less polluting than oil fuel.
A small point, even if we go for 100% electrification, I think it's very, very ambitious to say that this will happen without any gas production, electricity produced by gas in the system, at least for a few decades to come. So then you do see a future for gas on the electrification side of things. But then, of course, there are so many other usages of gas that we have to see where we want to get.
Because the Chinese say they are the solution for this problem. High voltage, long distance power transmission. If you have a power line from China to Germany, to say, or Europe, then electricity wherever it comes to is basic. We don't need anything else.
I will take two questions together, and then I shall move to the next presentation. I think the gentleman with the microphone on, and then the gentleman behind. Yeah?
Well, thank you for the interesting presentation, Christian Hoffman from University of Technology Berlin. Could you elaborate a bit more on the issue of LNG terminals in Germany to take up supply from around the world? You said we have those tankers circling the world, not finding any landing ports. So it wouldn't be an issue of demand, but an issue of oversupply and creating some artificial demand for this LNG, or I didn't really get that point.
Not sure.
Why we would need that. And the second point is, so if prices in Asia are so low, and then there's a supply push to Europe, and there's enough storage in Europe, so that it's cheap enough to then just use this LNG to store it, to use whenever, I don't know. Thanks.
Can we take the question also from the gentleman behind, and then we...
Maybe I can answer first,
Okay.
Yeah, that was actually my question. Is there kind of a business case for LNG storage in Europe? And if there is, you think so, when and where is it going more likely to be profitable? Yeah. Is it kind of a follow-up to my question?
Okay. So what I mentioned, which is unusual, and it answers your questions about LNG storage, is that at the moment, and it's a case that it's unusual, we have so much supply that we don't have enough slot availability at LNG terminals.
Is it in Germany only?
No. It's Asia, it's everywhere, especially in Asia.
Germany doesn't have it. Germany doesn't have it.
So it was just an example of what happened and why a new terminal in Europe could be useful. But it's very small, it's a tiny example. Maybe it was not a good example.
But more broadly, do you think there's a business case for LNG storage in Europe? This kind of in your analysis?
So LNG storage...
About demand?
So I wouldn't say that LNG storage is efficient, because LNG is liquefied, it's not natural.
Yeah,
right?
that, yeah.
So, but it's just because at the moment we have so much supply and not enough demand, and we see also a contango. It's not only about the availability, but you have a contango of prices. So we expect price in November and December to be much higher than the current prices. So
Yeah,
people
that's
like
exactly, because there's kind of a price difference. Do you think there's a
as
business
well.
case?
As well. So it's because of the contango and because there's not availability of slots as well. So it's a mix of things. But it's not something that people want to develop. It's just happening because of the current situation. But it can happen again. And this is why I linked to the German LNG terminals as an option to have in case you have a glut in Northwest Europe, then you have another option in Germany.
All right, thank you. Let's try to move to the next presentation for Tatiana. Tatiana, you have the floor.
Now it works. Okay, perfect, thank you. So it's really a great pleasure for me to be here. And actually, you know, I love these panels where ladies prevail. You know why? Because they make all the job for me. They've already told you the whole story, so now I can not focus on the graphs, on the figures, I can just speculate. Especially as my topic is extremely speculative, frankly. I mean, I'm a scientist in energy economics and geopolitics, it's something a bit different. But when you are talking about gas, you simply cannot avoid it, because it is so politicized. By the way, I'll try to give you scientific explanation why it is so politicized from energy economics. So, first of all, so my topic is geopolitics of European gas. And geopolitics, it's always about maps. It's always about geography. So geopolitics, right? And you cannot speak about it without looking at the map. And this map, which shows the major European pipelines and also the major flows of LNG, you have seen them already several times, it is actually illustrating what, on which suppliers European consumers are mainly dependent. So geopolitics, again, it's about leverage, it's about dependency, so who can blackmail you using this energy weapon. And if you look at the graph there from Eurostat, you can see that actually the major four gas suppliers to Europe currently are Russia, and by the way, look at 2018, Russia's share in the total European gas demand is even growing. So now it has exceeded 40%. It was normally 30% during the previous decade, which is quite funny, assuming all the struggle which Europe is heading against import dependency on Russian gas. Nevertheless, 40%. Norway, I mean, it's very difficult to say that Norway is not a European supplier. So formally it's not inside EU, but I don't think that anybody is not sleeping in night just being frightened by Norwegian cutoff of gas supplies, right? So let's look at it as a part of Europe. Then we have Algeria, and Algeria is one of the eldest gas suppliers, and there are some issues with Algerian gas supplies and predictability and so on. So yeah, that's really a geopolitical issue. And Qatar. Qatar is, you saw it's in the previous presentations, one of the, probably the lower cost gas producer. Which is supplying all major markets in the world. So it's not only Europe, it's Asia, it's Middle East, it's even like South America. So and Qatar is definitely a geopolitical issue. Just remember about the recent moratorium. So there are some clashes of interests concerning Qatar. And then what are we expecting This is about LNG going forward. LNG is definitely becoming more important than pipeline gas. If you look at all the projections, including World Energy Outlook by the International Energy Agency, you can see that by 2040, LNG will definitely prevail in the international gas trade. So due to its flexibility, due to the cost reduction, it is really becoming the main point of growth. And in this market, we see now 4 major players arising. So first of all, it's Qatar, which has a dominant position at the moment, but which is also planning to expand up to 100, even 110, they are claiming recently. US, yeah, and 90 million tons by 2030, it's just proxy. It could be 100, it could be 110, so again, it's very speculative issue. Australia is commissioning already all these new LNG plants, and Russia, by the way. So Novatek positioning itself as LNG national, national leader, national major player. It is also looking at something like 80 to 90 million tons of LNG exports. And this seems to be quite an interesting game, except for Australia, which hasn't shown any geopolitical ambitions. The other 3 are definitely quite interesting actors with their quite strong geopolitical agenda. So we have the current players, we have these evolving LNG players, and what it means for geopolitics of gas in Europe. Basically, these are the 5 suppliers, major suppliers of gas: Russia, Norway, Algeria, Qatar, and US, which could create some geopolitical issues. Once again, have you heard about any geopolitical issues with Norwegian gas supplies? No. Qatar is really subject for the Middle Eastern developments. So all the tensions in the Gulf and moratorium, by the way, which was imposed by the neighbor countries, all the potential threats for the Strait of Hormuz. So all this Middle Eastern story that can theoretically create some challenges for sustainability of Qatarian LNG supplies. But even more, actually, it is the subject to the price situation globally, because Qatarian LNG, all the contracts which they have for European supplies, they are quite flexible. It's like 50% take or pay on average. So at least 50% could be redirected. And Qatarian suppliers, they are really all the time playing between Europe and Asia, sending their gas to the most profitable location, which makes a lot of sense, but which means at the end of the day that if there is a cold winter in Asia and growing demand in Asia, there will be not that much of Qatarian LNG in Europe because of Asian premium. So Qatar is very profit-oriented, and therefore, so this could be in certain situations of shortage. It could be actually a stimulus for European prices to go up in order to be able to attract some additional LNG from Qatar if, once again, if there is a deficit. As Lucy has shown, it's not the case at the moment, and probably not in the next few years. The market is oversupplied. But in the longer term, let's say post-2024, it could become a more tight market, and then it could become an issue for Europe. Then Algeria. With Algeria, probably the biggest question mark is uncertainty concerning the future gas production. So there were very ambitious plans in the beginning of the century, above 100 BCM per annum, and the pipeline capacities were built. But then, if you look at the statistics, actually the production was not growing in line with all these plans, and more concerns were announced concerning sustainability of this production. So not sufficient investments in the upstream, quite sophisticated regulation, not very favorable investment climate. So whether Algeria will be able to provide all these volumes, at the moment it looks like everything is okay, it's improving and it's ongoing, but the whole situation in North Africa and sustainability of the regimes and sustainability of this gas production, well, theoretically at a certain point that could be an issue, especially for the southern Europe. But again, it doesn't seem to be any drama about that. And anyway, these capacities seem to be quite well diversified with LNG supplies. So when you look at the target markets of Algerian pipeline supplies, it is basically Spain, it is France, it is Italy, so the markets which also have quite good LNG infrastructure, and in case of any supply disruption, any emergency, it seems that they can replace this gas. So then we actually end up with two players, which is Russia and US, and that brings us, that gives some explanation why the hell there is so much discussion about price war and US LNG versus Russian gas and all this stuff. Well, again, I haven't heard about anybody discussing potential threats for Europe out of US LNG. So maybe you've heard, yeah? So it doesn't seem to be a security issue at the moment. So then so more likely there is a growing concern among European governments and companies concerning increasing pressure from the US side, which Ed Cho was mentioning during the first session, to absorb more US LNG. But again, it doesn't seem to be a real energy security issue. It's more like a political game, yeah, and they talk about independency. So actually, at the end of the day, geopolitics of European gas, it's mostly about Russian gas supplies. So not because I'm Russian, but simply because that's the story, that's how it looks like. And if we look at this story of EU, Russia, or better to say European and Soviet gas interdependency, it began long ago. It is changing now as we see more and more suppliers coming on stream. So if you look at the major gas producers, LNG producers, and major markets, I hope it will work. It is interactive. So that used to be like the traditional picture. Yeah. What is happening now? Wow, much more diverse. The markets are becoming much more interconnected, and the competition is growing. There is bigger diversity of potential sources of gas supplies, and hopefully, at a certain point, that will help to depoliticize gas. Because if you have many diverse sources, you do not feel that much dependent on any single source, even if it's as big as Russian gas supplies to Europe. As I said, this interdependency issue between Russia and Europe, it is really very, it's very big. It's not about gas, it's also about oil, it's about coal, by the way. Have you heard anybody complaining about European dependency on Russian coal? Never. Even European dependency on Russian oil isn't such a widely discussed issue. So why? What's the reason why gas is so specific? Why we are spending so much time talking about this European dependency on Russian gas? Well, it has long historical roots, first of all. It was one of the prevailing, well, not prevailing, one of the important topics during the Cold War. And you can see here this map of Soviet influence in Europe and compare it to the map of dependency on Russian gas. Lots of similarities, right? So it was indeed the way how Soviet Union was building connections with the Eastern Bloc. It was the way how it was trying to keep these countries under its influence. Yeah. What has happened in the post-Cold War period? Definitely the borders moved back and this influence was significantly undermined. But Russia decided to partially restore it with the new pipelines in order to stronger link Europe to itself, in order to increase its leverage, in order to increase its hard currency revenues, by the way. So it's not just geopolitics, it's also about securing market niche in Europe. So it makes a lot of sense, and you know how dramatic these developments were. Just to remind you about South Stream project, you remember? Yeah, cancelled. Nord Stream, I mean, Nord Stream 1 was quite exhausting for me, but Nord Stream 2 became a real nightmare. I mean, the time we all have spent discussing Nord Stream 2, it's just unbelievable. We could have built dozens of such pipelines during this time. So it's very emotional, it's very sensitive for all sides involved. And when you try to understand why it happens, it is just a pipeline. Why it is so politicized? Well, it is about Ukraine, it is about Baltic states, it is about Poland, it is about Russia's influence in Germany. So many non-economic political issues are associated with that, making it much more than just a pipeline. And, well, here we are. At the end of the day, I'm professor of economics. I should tell you something about energy economics, not just about geopolitics. So what is so specific about gas? Why it is creating so many tensions, and why it is so rigid and inertial compared to any other energy business? Transaction costs. Yeah, it's all about transaction costs. When you are building pipeline, it is an asset with a very high specificity, and the transaction has very long duration, and the risk of opportunistic behavior of your counterparty is enormous. Yeah? So that's why you need to secure your investments either with vertical integration, which was the case in the initial stage of gas markets developments in all countries. It was always provided by huge monopolies, or by these very rigid long-term contracts, which is a sort of replacement of vertical integration. So rigid obligations by the parties, strong political backup, which is, well, normally all the international gas supply contracts, they are signed under the auspice of some sort of intergovernmental agreements. It's not just companies contacting and shaking hands, but it's also the governments providing a sort of guarantee that this contract will be fulfilled from both sides. So that's how this market was evolving to justify these enormous investments in the pipeline construction. But what happens when the market is developing? I will show you in a couple of slides that actually the specificity of assets is going down, especially as we start talking about LNG, which is much more flexible. You are not that much dependent on your customer. You have flexibility, but even with the pipelines, if your pipeline has outlet to different customers, if you are not 100% dependent on one client or on one supply source, that gives you some ease in this specificity, asset specificity story. What else is happening in Europe? So it's important, I'm just trying to give you the whole picture and then put it all up together. So we were talking about European gas demand, but actually if you look at OECD Europe, basically it is already going down. So all the projections of the European demand, if you look at OECD Europe, or even if you look at EU, or even if you look at Europe 35, including all countries on the continent, you can see that there is a huge uncertainty concerning its future dynamics. So most of the outlook producers agree that it will increase in the next few years, but then it's a big question mark whether it will go slightly up or whether it will stagnate or whether it will go down. Basically, most of the projections are actually showing a decline of the European gas demand by 2040, 2050, which is absolutely understandable if you take in mind all the decarbonization targets which Europe is now discussing. So anyway, it's not definitely a booming market. It's a market which has constraints. So it's not expanding like the Chinese market, 10 to 12% per annum. It's more or less stagnant. There is this decline in indigenous production, definitely, and previous speakers mentioned it. But anyway, this market niche, it's not expanding as fast as all producers would love to. It's not providing sufficient place for everybody. It is actually doomed for competition. Competition is becoming absolutely inevitable. Let me show you the contractual situation on the European market. As I've mentioned, it was all designed initially for long-term contracts, and that was requirements of all gas producers. By the way, this contract formula, it is even called Groningen formula because it came up not from Russia, not from Gazprom, it came from Netherlands, and it was necessary to justify investments. So, European consumers have already created huge portfolio, very long-lasting portfolio of long-term contracts, which is actually going far beyond not only 2025 shown on this picture, but also 2030 and even 2035. There are contracts going beyond that. And one thing I can tell you from the legal point of view, we've made a lot of research looking at that. These long-term contracts are extremely resistant. So it's impossible to break them up. You can renegotiate prices, true. You can renegotiate take-or-pay volumes, not dramatically, not like cut them by half, but you can slightly reduce them 10, 15, maybe even 20%. That's it. So there is price flexibility, potentially. There is not such a big volume flexibility, but basically they are here to stay. There were lots of attempts since 2009 to break up any of these contracts. They do not work. I mean, these attempts do not work, contracts do work. So what we have at the end of the day, indigenous production going down, it's this gray area, minimal contractual quantities of Russian pipeline gas, yellow, other pipeline gas, gray, and already contracted LNG supplies, blue, and stagnant or even declining domestic gas demand. So there is only this dotted area where the competition will really take place, where all the new LNG suppliers will compete with all the additional supplies from Russia, from Norway, from Algeria, from elsewhere. So that means that there will be really an extremely tough competition because this niche for additional gas is so limited, so small. And what is interesting, it will be exactly the market which will define prices for the rest of the supplies. Because right now, after these 10 years of painful transition, most of the contracts have been renegotiated and switched from oil indexation to hybrid indexation or spot indexation. So actually right now, Gazprom doesn't have any purely oil indexed contracts. They are all somehow related to the hubs, which means that this dotted area, it will be traded at the hubs and competition will be there, and if there is an oversupply, the prices will go down, and these prices will bring down all the prices in the long-term contracts, which are related to spot prices. So it's not going to be an easy and attractive market for the suppliers. In case of Japan or China, you have much more relaxed situation concerning prices, and less competition. But it will become a sort of a market of the last resort. So if you cannot sell your LNG elsewhere, you will sell it to Europe just by dropping prices. Well, in certain situations, it will be your only choice. Once again, just to illustrate the positions of different players in this market, long-term contracts, they are the minimal contractual quantities, so something that the consumers are obliged to pay for, even if they don't want to take it, they have no choice. And you can see that Norwegian, Qatarian, and Algerian contracts are going down very fast already in the next few years, while Russia has really secured very strong portfolio, which already guarantees that there will be at least 120 BCM per annum of Russian gas supplies to Europe, whatever happens. Yeah? So this dependence will stay there. There was a question about competitiveness of different supply sources. Well, okay, it depends on how exactly you calculate costs. It could be short-run marginal costs or long-run marginal costs, so there are different approaches, different methodologies. But in any case, Russian pipeline gas and even Russian LNG are definitely not the marginal suppliers. So they are more expensive than Qatar. Definitely Qatar is the cheapest, whatever happens. But they are more competitive than US, than East Africa, than even Algerian LNG. So, and then there is always this flexibility, ruble devaluation, which allows to drop prices even further, taxation issues. So my guess is that Russian gas will win in the most of competition. So not always, not all the time, but it is really cheap and abundant compared to the other sources. And pipeline gas from Russia, differently from LNG from all the other sources, actually doesn't have any other outlet. So it is a rational choice for Russia to bring prices down in order to secure market share. Because otherwise this gas will rest under the ground, so there are no other ways to monetize it. So how does this whole European game, gas game, looks like? I don't think that there is any single scenario. Actually, it will be very opportunistic, simply because Europe is very much dependent on two major exogenous factors. First of all, the price of oil. Yes, though most of the contracts are no longer oil-linked, the price of oil still plays a huge role in the competitiveness of gas overall. But also Asian gas demand. Asia is now the center of the global gas business, and if Asian gas demand is growing, then it will be absorbing most of the LNG, so Gazprom will feel quite relaxed in Europe and the competition will go down. If for any reasons. It could be party decisions in China, it could be nuclear restart in Japan or whatever. So if for any reasons Asian gas demand is not growing as fast as we expect, then it will result in much stronger competition in Europe, lower prices, and further contract renegotiation. And with the oil price, with the low oil prices, Gazprom and basically all the traditional gas supplies, they are feeling okay. If oil price goes up, they will have to renegotiate their contracts because it will be extremely difficult for them to remain competitive with the non-oil indexed LNG supplies. And now I promise to use some sophisticated scientific graph or table. Here it is. So what happens with the gas markets and energy security concerns if there is any, if there are any trends, if there is any logics in them? I believe that, yeah, it should be. So as the markets are growing from local to national, then international, and finally to the transcontinental or even global, and we seem to be now entering this fourth yellow stage of the global gas market, the main products traded are becoming more diverse. It's not only pipeline gas, it's LNG, and I suppose that hydrogen will also become part of this whole story. And infrastructure is becoming more diverse, which is lowering its specificity, once again, and which results in a more diverse set of contracts. So institutional framework in this case is becoming more flexible, and with the increasing competition between domestic production, pipeline supplies, LNG supplies, hydrogen supplies from different sources, the markets are becoming more oil-like. Yeah, so more competitive, more linked to the spot, more flexible, with shorter contracts, with different contractual models, not only a single one. And well, at the same time, the risks are becoming more diverse. It's not only a physical or investment risk as it used to be on the first stage of the market development, when, first of all, you need your infrastructure not to explode, and then you need to get your investment returns. Now it's also about price and volume risks. Yeah, and it's about geopolitical risks again. So any transit disruptions, any closures of straits, any bans on supplies from specific sources. So it's all geopolitics. And at the same time, some new ways to deal with these risks appear. So all these are international consortiums, all these multinational agreements, all these associations like JERA and others. So players are becoming more diverse, and they are looking for the ways to lower their risk exposure. Yeah, it is the last slide. Yeah, so, yeah, long story, sorry guys. So what's next? There is definitely this market evolution, and I believe, well, at least I hope, that in the next decade, this availability of diverse sources of gas supplies will actually help to depoliticize gas. And by the way, our recent discussion in Berlin shows that people are far less concerned about potential disruption of gas supplies through Ukraine. Yeah, we are heading towards the end of the transit contract, so whatever could happen. But traders and companies are not that much concerned about it because there are other sources, there are underground storages, so there was this active debottlenecking of the infrastructure. So there is some premium, like €2 per megawatt in the price, in the forward price, but it's not something dramatic. So there is no, there are no really serious concerns about this geopolitical issue. And then the most interesting question is how this whole geopolitical game will evolve together with decarbonization agenda. So if we will have more and more hydrogen participating in this trade, if there will be shorter contracts and more diverse contracts, how do we make risk management? How do we hedge that? It's not quite obvious. New trading platforms, how will they work? So actually we can now feel a bit more relaxed about gas geopolitics, but at the same time we step into a completely new frontier with green gas, decarbonized gas, and I'm afraid that there will be lots of interesting questions so far without answers there. Thank you. That's it.
Right. Thank you very much for the very good presentations. I'm going to go directly to yourself as the last two speakers. You've described new models and new business practices in LNG markets. LNG tankers are, of course, very expensive to build. Do you see them being, and without long-term contractual relationships, it may be problematic. And historically, of course, LNG tankers are built with dedicated long-term 20-year contracts. Do you see that as an issue? Having you see increased reliance on LNG, but of course on more LNG regasification units on shore. But of course you need the tankers, the LNG tankers to get it there. So maybe if you could direct to that question, please. Thank you.
Should I? Yeah. So I'll try to answer. Maybe you will join me. First of all, there are already many tankers built which are available, which have more or less amortized, which are not already dedicated to any specific project. And this is creating this liquidity in the market. Moreover, I believe that China and South Korea, they've managed to more or less commoditize this LNG tankers construction. So they have very, well, comparatively low lead time, and they can increase production in a quite fast way. They've demonstrated it a few years ago. So at the moment, for me, it doesn't look as a constraint for the liquidity of LNG market. It could become from time to time, but I don't think that it's a systemic issue or systemic constraint.
Thank you. Just to confirm, the shipping market at the moment is very tight because the increasing trade of LNG. So you don't have enough tanks at the moment to transport all this LNG, and the markets of LNG is growing. So it's more good news for a shipping market.
Thank you.
Thank you.
That for a particular comment, is it that the barriers to entry in new shipping are so high that it's the Chinese and the Koreans who have just cornered a piece of the market in their
FSRU. The FSRU is less costly, and so there's more interest into the floating storage terminals.
Let's take the question back and then we'll come back to
yeah, thank you.
On the point, please.
Kristen Hansen again, thank you for your presentation. Just real quick, have you any, for clarification, have you any like numbers regarding the contracted volumes beyond 2025? Is that like 2030 still 50% of today's demand? And the second point, so more stringent climate policy, is that received as a risk, or is that more like, well, it won't happen anyways and we'll diversify towards like hydrogen and so on? Thank you.
Thank you. Good questions. I don't remember the exact figures by heart, but for Russia by 2035 it's still like 35 to 40% contracted volumes. I don't remember for the other producers, but I think it's far lower, so maybe 5–10%, something like that. As for decarbonization strategy, well, look, in the Russian strategy, in the Russian concept of energy security, this policy, as well as renewables, electric vehicles, and all this stuff, is regarded as threat. So the official position is very clear, but I don't think that really it is just a threat. So it's a threat in the sense that everybody has to change business model. And I mean, I wouldn't be surprised if in a few years European regulation will require obligatory certification of any gas supplied from its carbon footprint point of view. So it will happen. But I believe that it's not only threat, it's also an opportunity for any gas producer, but for Russia in particular, because it could actually step into hydrogen production. It has a very good potential both for blue hydrogen and for green hydrogen. So it's not only about methane reforming or cracking or whatever technology you take, but also about renewables. But it is requiring a rethinking of the whole business model. And it is something I think most of the companies and governments are actually struggling with. It's very difficult to assume that the market where you've been working for 50 years is changing completely.
I have a quick comment and a question. I saw the slide that you showed about how the market is now changing with much more the traditional US MENA Asia model is now being changed to multi-polar model. A quick glance at it shows that the number of suppliers coming into Asia is a lot more than in Europe, and that has a very peculiar implication on Russian gas strategy. That it's got a 40% share of the market in a market where there is not many suppliers coming in. And it is now exposed to an environment where there is lots of liquid LNG floating around that the Asian buyers are going to opportunistically take. So the contracting structure in Asia might be very different to the contracting structure that you may have seen in Europe. In that sense, would it not be value destroying for Gazprom to push more gas into Asia?
Well, it tries to, but it's always not only about volumes and not even about prices, but also about marginality, about profitability of your supplies. And all the gas most of the gas which Russia is supplying to Europe, it goes through the infrastructure which has been already amortized. And these are good old fields in Western Siberia with pure methane and extremely low lifting costs. While when we are speaking about Asia, these are much more sophisticated deposits with natural gas liquids and helium, with the new infrastructure to be built in the middle of nowhere, with actually insufficient gas reserves. When we are talking about Sakhalin, I mean, there is not sufficient proven gas reserves to justify any new big project. Even Sakhalin 2 expansion, like third train, is still in limbo because there is no gas available basically for it. So in Asia it's much more complicated and the margins seem to be lower. Therefore Gazprom seems to be quite resistant, so it is forced by the government to build Power of Siberia, to have all these talks with the Chinese concerning Altai project or Eastern Pipeline, but actually we do not see any realistic outcome. I think for Russia it will be both Europe and Asia on the agenda, and LNG led by Novatek, global LNG supplies led by Novatek. Well, again, this diversification for the suppliers when you are not completely dependent on just one market is also, I think, to the benefit of gas markets and will help to reduce the importance of geopolitics in this market.
Thank you very much, Tatiana. I hope that you have all enjoyed the discussion, and I'm sure you will enjoy the rest of the conference. We are out of time, we have past 10 minutes of our presentation time. So please join in applauding our speakers.